back to Indianomics. We have been analysing Governor Rajan's performance at RBI as he completes 2 years in office. I will shortly have with me Professor Gita Gopinath. She teaches economics at Harvard University, a celebrated professor, and Marc Faber, the author of Gloom, Boom and Doom. But before I get them on, let me play out to you our poll of India Inc., bankers, rival regulators and economists on how they grade Rajan's 2 years in office.
Volcker, Yellen, etc. How about Rajan?
Rajan is perhaps the only RBI governor who came in with international credentials and international comparisons. So clearly, the standards used by our respondents was also that much more demanding. We polled Rajan on 5 parameters. The foremost as a monetary policy maker. Here, Rajan scores the maximum and 80%. A majority gave him 90 to 100% for changing the discourse of monetary policy and ensuring inflation control becomes the nation's preoccupation. But many give him a C or a 50% for sacrificing too much by way of growth. On financial markets, Rajan scored his second best marks, a 76%. He got marks for being the anchor of credibility and stability for the forex and stock markets, but he got flack for not developing the bond markets despite being a master academic in finance. As a banking regulator, he scored 75%. Finance directors of some large companies said he has simply not got his hands around the NPA problem. But a couple of big bankers and regulators gave him an 8 on 10, saying the building of acrylic database of borrowers, resisting forbearance and sensitizing the government on the need for capital are his achievements. Rajan scored poorly on PSU bank reforms, just 67%. Many said there has been no reform. Others noted that the setting up of the PJ Nair committee and quietly ensuring that some of its key recommendations are adopted by the government is in itself an achievement. On inclusion, Rajan scored a good 75%. Rival regulators said giving payments bank licenses to some large conglomerates and telecoms can be game-changing. Overall, Rajan's rating as a central banker stands at 80%. Rajan would have scored much higher had he cut rates more. But in his own words, soon after he took over, he was interested only in administering the right medicine to lower a feverish inflation, not the most popular one.
Some of the actions I take will not be popular. The governorship of the central bank is not meant to win one votes or Facebook likes. But I hope to do the right thing, no matter what the criticism, even while looking to learn from the criticism.
Okay, so that's the poll. Let me now welcome Gita Gopinath, Professor of Economics at Harvard, and Marc Faber. Welcome to the show, both of you. Gita, you go first. Rajan completes 2 years in office this week. How would you rank him first and foremost as a monetary policy maker?
Oh, he'd be very high up there. I mean, nobody's perfect, but he would be pretty close to, as good as it gets. In terms of monetary policy, I think Rajan will be remembered as a person who, was in charge when inflation came down, was almost halved. So, though there was a combination of factors that affected inflation, including world commodity prices coming down, inflation has been reined in, and that was a struggle for a while. And so this is, he certainly deserves an important part of the credit for that. And then the second thing is, as a monetary policy maker, I mean, the biggest issue is to convey credibility. And Rajan has conveyed credibility not just domestically, but even internationally. I mean, he is a person who people look to for advice, not just on the Indian economy, but also on the international economy. And so I think the combination of factors makes him a very successful central banker.
But corporate India and politicians charge him with sacrificing really too much of growth to get that inflation number. Do you think that is a fair charge?
I think that's unfair. I think the first thing people need to realize is that when we're talking about growth for a country like India, and one aspires for growth rates closer to China in its heydays, which is around 10%, that kind of sustainable 10% growth is not driven by monetary policy. So you have to recognize that first off the bat. I mean, monetary policy is mainly for cyclical business cycle phenomenon. India requires a trend change in its growth rates, not just a change in, it's not a temporary downturn that we're thinking about getting out of. It's all about having sustained growth for many years, 10 to 20 years. And that comes about through structural reforms, that comes about through raising productivity, through improving the ease of doing business. So those are really the go-to variables. If you think of how countries like, China or Korea or Japan, or these other East Asian economies grew, they grew because of very good economic reforms. It's not monetary policy that generated high growth. So I think people should first absorb that fact. So I'm not very persuaded by those who complain about high interest rates as being the main factor for low growth in India.
Mr. Faber, as a monetary policy maker in the last 2 years.
Well, as you know, different people have different views. But in my opinion, Rajan has done an outstanding job as a central banker. All over the world, central bankers have been printing money. And this lifts asset prices, and it leads also to rising wealth inequality. Now, we know very well from statistics in the US that over the last 10 years or so, but especially in the recovery after 2009, it was not even 1% that made a lot of money. It was 0.01% of the population, so a very small part of the population. Now, in the case of India, I would estimate that there are maybe 40-50 million shareholders on the population of 1.2 billion. Of these, there are only very few large shareholders, probably 10,000 or 20,000. Now, these people are all the ones that would like interest rates to come down and stocks to go up. But for the typical Indian, it doesn't matter whether the stock market goes up or down. For the typical Indian, more important is price stability and currency stability. And so the way he has conducted a monetary policy has benefited the majority of Indians and not just a tiny minority.
Okay, Gita, let me pursue with this central banker performance of Rajan. He has convinced the government to sign a monetary policy agreement with the RBI, and this pact agrees that Reserve Bank's main goal, or maybe even only goal, will be to get inflation down to 6% first and then to 4% in the medium term. Would you say this itself is a big plus?
So firstly, I'm not sure if that memorandum basically means that India is exclusively on an inflation targeting regime. I think what has been accomplished is to say that there is some level of inflation above which we might have zero tolerance. And that number is fairly high. 6% is a high inflation number. So if we were talking about targeting inflation of 2% or 1%, then we might say, well, that sounds a bit unreasonable, and that's going to compromise growth agendas. But that number doesn't seem to convey that. And so I think that he can accomplish, I think whoever comes in after him in the future too should be able to bring about both stability and keep inflation low with this target in mind.
While Rajan will be estimated on inflation control, he's frequently accused of poorly estimating inflation. As of now, almost every year, inflation has been undershooting his estimates. So is that a fair charge that he is wrong in his estimates?
Not really. So this is what happened. So we had a period not so long ago when it looked like inflation was always overshooting the desired value. And now there is a small phase where it looks like, relatively recently that it's been undershooting it. But one has to be very careful with interpreting 1 or 2 or even 3-quarter numbers on inflation and linking that to monetary policy, because monetary policy works with long lags. And so, this kind of volatility that you might see inflation has typically more to do with commodity prices. And it does have an effect even on core inflation, if not directly. And so no, I'm not going to say that this is not, if you go through 2 years or 2.5 years of undershooting your target, then, that might set a flag off. But the question is whether that's a big deal. I mean, I don't think that this undershooting is a big deal for India.
Mr. Faber, to come to you, how would you rate Raghuram Rajan on the manner in which he has managed the exchange rate, generally the markets?
I would rate him on a scale of 1 to 10 at 10, and Miss Yellen and Mr. Bernanke at -20.
Mr. Faber, internationally, Rajan has repeatedly told all the big central banks not to take on too much on their plate, not try to energize their economies, but just to leave it to their respective governments. Is that a position you agree with?
Yes, I think he's 100% right. Unfortunately, he's talking to a brick wall of essentially professors and academics that know nothing else but to print money, and they will continue to do so and not listen to him.
All right, we have to leave it at that. Gita and Marc Faber, thank you very much for joining me. Well, that's a lot of expert opinion for you, but here's my key takeaways. First, I think Rajan's biggest and hopefully his lasting contribution is bringing inflation control as the central goal of the Reserve Bank. He's changed the very discourse of monetary policy, and my submission is changed it for the better. Second, on NPAs, I would rank him lower. I worry. It may not be because he is not competent, but simply because the problem is so large. The sovereign has to help. This clearly is work in progress, and quite clearly his and India's biggest challenge in the coming years. And finally, Rajan's licenses to 11 entities for payment banks may be his other biggest contribution to India. It may change the way Indians send money home to their families. It may change the way the villager saves, the way the villager spends, and the way you and I spend and save. That may be the ultimate Rajan revolution. We'll have to wait and see. Thank you for joining on this edition of Indianomics.